Hello and welcome back, guys. So in this particular session we will be discussing question number 10 of SPR's exam kit. Okay, so what we are given is that we've been given SOPL, and then so some of the investments are in foreign currency as well in case of Saffron, and then SAYS is our subsidiary, I guess. So in the first requirement, what we are required to find out is discuss with calculation how Parsley should account for sales in consolidated statements of SOPL and OCI for the year ended 30th April 20x4, right? So what has happened? Let's look at it. So Parsley acquired 70% of sales 1 million $1 ordinary shares for 6 million many years ago. At the acquisition date, the carrying amount of sales net assets was 5 million, and this was deemed to be the same as their fair value. Non-controlling interest was measured using net assets method, right? And goodwill arising on the acquisition of sales has never been impaired. On 31st October 20x3, Parsley sold 300,000 of its shares in Saga for 6.5 million. Okay, so out of 1 million, right? So that means 30%, it sold 30%, right? It had previous holding of 70, now it sold 30%. And then the fair value of the retained interest was 9.5. We will need that in order to calculate our gain or loss on disposal, right? Blah blah blah. So let's do it. So first thing, SAYS, right? Company's name is SAYS. So what has happened is that Parsley has lost control. When did it sell? On 31st October. So October will be how much? So its year ending is April, right? So that means May, June, July, August, September, October, 6 months, exactly 6 months. Has lost control as the shareholding percentage has decreased from 70% to 40%. Since it was disposed of at or on 1st of October, or what is it? 31st October 20x3. 31st October 20x3. That is 6 months. So while preparing consolidated financial statements, so only 6 months needs to be consolidated. Only 6 months of 6 months should be consolidated on a line by line basis, right? So let's find out the profit. Okay, let's calculate that. First of all, let's find out let's prepare our working note. Working note 1, parent NCI, right? So 70 and 30. Then working note 2, right? Calculation of net assets. So at acquisition, at disposal, what was the share capital? Share capital was, I think, 10 million. I think it is, yep, 1 million. So what was the total assets? Net assets, right? So this will be sum of everything, right? And paste same thing over there. And this figure will be same as that. And then retain earning. Earning will be net assets was 5 million. Okay. So what we'll do is that let's make it in million. Okay, everything in million. So it'll be easier. 1 million. So since this was 5 million and that was that much, that means 5 minus 1. Retained earning should be 4 million, right? And then during this period, what we are given is that, so we've been given retained earning at the start of the year, right? So it was 9 million, okay? Increased to 9 million, 9 plus 9 plus what's the other thing? What was the change during the year? Profit was 6, right? So that means 3. 6 into 6 divided by 12. Right? 13 will be our total net assets at disposal date, right? So working note 4 will be, do we need goodwill? Yep, we do need goodwill as well. Calculation of goodwill. Right, so this will be basically cost, a value of net assets, and then less net assets at acquisition. Goodwill, right? So what was our cost? For 6 million. Okay, so 6 million was the cost, and then after that, what is our non-controlling interest or proportionate method? Okay, so that means it's more easy. Okay, and what is our cost? 6, right? So 6. This will basically be net assets into this, right? So this figure is 5, and then okay, so I need to change this thing as well. Percentage 70 30, right? So now that's good. Let's add this thing up. Sum of this two will be 7.5 is equals to this minus this. So this will be our goodwill, our parents goodwill only. Goodwill and disposal as well. Has there been any impairment? Let's look out for that as well, otherwise this will just be goodwill at acquisition. Okay, and has never been impaired. Okay, good. So what else do we need? 3, right? And then what else do we need? We need is working note 4 as well. calculation of non-controlling interest, right? So this will be this figure, and then share of profit, right? Which will basically be profit. So what will the profit? 6, right? 6 into 6 divided by 12, 3, right? Into 0.330%. So this plus this will be NCI is holding, right? This minus this. So what we'll do is that let's calculate the other thing that we need is working out 5. 5 is about gain or loss on disposal, okay? Gain or loss on disposal. So what's our holding percentage? Disposal proceeds, and then fair value of retained interest. Value of retained interest, and then that's pretty much it. Less interest disposed of, right? Interest disposed of, right? So this will be bold. Will at disposal net assets at disposal less NCI at disposal. This will be this figure minus this. Sorry. So once that's done, let's put our net assets at disposal. And goodwill at disposal is 2.5, right? Since there has not been any impairment, so sum of all this will be that, and then after that, how much did we get upon selling it? 6.5, and then retained interest was 9.5. 6.5 and 9.5. 5 and 9.5, right? So our total will be 16, right? So on this particular sale, our profit will be 2.9. Isn't that correct? No, because what has happened is that I should have done this minus this as well. So this figure should have been this figure into that. Alright, now it's good. Profit on disposal. We only need to be careful when we are accounting for when we are creating SOPL, okay? That's all. That's why I was just being curious about it. So that is done. So what we will do is let's explain these figures, right? So our gain will be 4.4 million, right? After that, gain will be that, and then share of profit will be. So now it has become associate, right? So associate, it has become associate. So the whole year it earned profit of 6, and then 6 divided by 12. So half year was a subsidiary, half year it was associate, right? So we need to divide that, and then our percentage holding, right? So this will be our profit for that period, right? Yep. So let's explain these figures, okay? Mm, sales made a profit of sales made a profit of $6 million, 6 million during the year ended something x4, right? Isn't it? 30th April 20x4, year ended 30th April 20x4, right? Out of which should be divided into 2, and only the earlier 6 month will be consolidated as it was a subsidiary during this period. During this period only. Out of this mm, the first profit for first 6 months is $3 million. 6 into 6 divided by 12, right? Which is further divided into NCI and parent. Let's calculate that as well, okay, quickly. 3, right, into what was the parents holding, 0.7%, and then what was the parents holding was 3 into 0.3, right? So 2.1 and 0.9, 0.9, 0.9 million. All right. Only 2.21 million. So after this, what we will do is that let's just show them this calculation as well. Bold it, and then let's show them this calculation as well. Just unlinked. Right. Any other things will be in spreadsheet, and then after that Once is disposed, the parent will only have significant influence over sales. So as per IAS 28, investment in associate and joint ventures, it should be counted for using equity method. So in the consolidated SOPL, the group will show share of profit from associate of the profit 1.2, right? Dollar 1.2 million. Okay. Okay, so once that's done, so let's look at the other question as well. Number 2, bold. What is it about foreign currency, right? Saffron. So discuss with calculation how Parsley should account for this. Okay, so what we are given is that acquisition of saffron, right? So saffron, hold it. So what we are required to find out is that on May 20x3, Parsley purchased 60% of Saffron's 1 million FR1 ordinary shares. So it's franc for 71 million. The non-controlling interest of the acquisition was valued at 29 million using the fair value method. At 1st May 20x3, the carrying amount of the Saffron net assets was 60 million, but the fair value was 70. The remaining excess was due to unrecognized brand. So brand with a limited life. That means amortization. Okay. As per IS 38. Okay. So that's also done. And then the exchange rates are given, right? Goodwill arising on acquisition was impaired by 4 million. So let's use our template. So in this case, we can use this same template. Let's use it. So what's our holding percentage? How much did we own? 60 and 40. 60 and 40, right? 60 and 40. 60 and 40. Total net assets was, how much was the fair value of net assets? 70. Whereas this was only 60, right? Carrying amount, fair value, right? Because as per IFRS 3, we are required to value it at fair value, right? Fair value, okay, that's done. And then the difference is 10. This is for brand, right? So we need another space as well because this is brand. There should be amortization as well, right? And this figure will be same, excess amortization. So all this are in addition, this divided by how much is the life, 5 years. So how many years have gone by? So on May 20x3, that means it was purchased 2 years back. On May 20x3, where we are at 30th April 20x4, exactly 1 year ago. Okay, so only for 1 year. Easy. Okay, so our net assets will be during this period will be sum of all this, right? So when we are calculating our goodwill, what will be our cost? Our cost will be for 71 million, right? So 71 and 29, 71 and 29, 29 net assets, same thing. So total goodwill, this will be total goodwill. Okay, total goodwill, and then fair value of net assets. Do we need to calculate this? I don't think so. We don't need it, I guess. So how should this affect that figure, right? So what we need to do is that basically we already know that the saffron's profit for the year is 30 million, so it needs to be deducted by 2 million to excess thing, right? Okay, so we don't know about this fair value as well, okay, because we are not given any clear information on that. So working note should be is there impairment? Yes, there is an impairment of 4 million. Less impairment. Minus 4, right? So goodwill will be 26, right? So let's translate this figure, okay? Translate all this thing. Goodwill translation. Translation, right? So first thing first, particulars, and then opening balance, or opening balance will be that figure. Any impairment is there, and it will be closing balance, right? Closing balance. So what about the amounts? So what are we transferring from? Franc exchange rate, and then we are transferring it to dollar, right? Which is in million. Okay, so this is franc in million as well. So what's our opening balance? Opening balance is 30, right? And then our impairment is 4, right? Come on, man, 4. And then our this figure will be same as this figure, right? And what's our exchange rate? So when did we acquire it? On 1st May, right? So 5, and then average is 4.6 and 4. Okay, so 5, 4 and 4.6. 5, 4 and 4.6, because we will use the average rate for impairment, and then the impairment needs to be allocated to profit or loss as well. Okay, so this figure will be 30 divided by 5, right? Copy, paste, which will basically be, I think it'll be 9. Yeah, it'll be 9. And then this figure will be the same, and then what has happened is that how much will this total be? This plus this 5.1, right? So there will be a gain, right? This figure minus this figure, 5.1. 1.5 translation gain. Okay, so it should have been only 5.1, but in this case it is 1.4. Okay, so what we will need to do is that impairment attributable to parent NCI, right? And then translation gain attributable to parent NCI, right? Even this has to be attributed. Okay, so this into holding percentage 0.6 should be 0.5, right? So again same thing, this into 0.4 because that's their holding percentage, and then this figure will be translation reserves, so this figure into 0.7, and then again same thing, this figure into 0.4. All right, so both this will be 0.5 and okay, so this figure will be shown in OCI, right? And then this impairment will be recorded in SOPL. Okay. What about foreign exchange translation working note 5? Okay. 5 bold it, net assets translation. So same thing for this as well. The only thing difference that will be is that this will be profit for the year. So what's our opening balance of net assets is already over here, 70, right? And then what's our closing balance will be this figure plus profit for the year, right? Since it was acquired exactly 1 year ago. So what's our profit for the year? So remember about the amortization as well. So profit is 30, which is not exactly 30 because amortization is not included within it. So we need to reduce it by -2 as well, right? So that means this is 102, right? And then this carrying amount has increased by how much? 32. Sum of all this should not be only 40, man. It should be 92. Not only 92, 94. Okay. So that's how much it should be. Okay. So 14 plus 7. This minus this minus this 4.5, right? This is not 32. should be plus. Now it's good. Okay, so this translation will be a impairment, not impairment, I mean transaction gain or loss will be attributed to same thing over here as well, but only this figure will change 28, 828, right? So let's make it single digit, makes it easier. So this figure will be reported in OCI, okay? Right, so what will be our NCI? So in order to calculate that, calculate working note 6, okay? Working note 6. Bold, okay? So what I'll do is that quickly profit attributable. Okay, let's just explain it out there so that it'll be easier for everybody to understand. So profit or loss, right? First of all, profit or loss adjustment, and then goodwill and foreign exchange, right? Goodwill impairment, and then the other issue that we need to talk about is foreign exchange, right? So let's talk about profit or loss. IFRS 3 business combination says that the net assets, identifiable net assets, what is identifiable, if it is separable, and if it arises out of contractual or legal rights. Okay, identifiable net assets of an acquired entity or subsidiary, you could say subsidiary as well. Subsidiary should be consolidated and its fair value any unrecognized uh, intangible assets in individual must also be consolidated at its fair value. In this case, in case of saffron, case of saffron, uh, brand was the value of brand or fair value of brand is $10 million, which is basically 40 minus 30, Not 40 minus 30, 70 minus 60, right? Isn't it correct? 60, 70 minus 60. 60 and 70 up is not this FR. And as per IAS 38, intangible assets, if an asset with definite life definite life should be amortized over its life and also tested for impairment review, or also impairment review needs to be conducted every year. Since it was acquired only a year ago, so amortization of only 1 year is necessary. That is for 2 million, basically 10 divided by 5, right? Okay, so therefore the adjusted profit will be not dollar FR 28 million. FR 30 minus FR 2 million, right? This profit, when it is translated to presentational currency, which is dollar, will be 28 divided by 4.6, right? Isn't it? 4.6 will be 6.1. Dollar 6.1 million. This profit will be attributed to parent and subsidiary based upon their holding percentage. Percentage, right? Do I have to break it down? Let's break it down as well into zero point 0.6 into zero point 0.4. So it'll be in single digit figure. 3.7 and 2.4. 3.7 and 2.4. 3.7 and 2.4. 2.4. Calculated based upon their holding percentage, right? So what about impairment, goodwill impairment as well? So what we will do is that we will basically put this whole calculation over here. Calculation is there, and then also the translation as well. Okay, goodwill translation as well, and this thing as well. Let's put the whole thing. Translation. Right. So the impairment of what is it? 0.9, right? Dollar 0.9 million should be attributed to or is recorded in SOPL, and it is also attributed to in an NCI based upon the holding percentage. Okay, the translation gain of how much was the translation gain? 1.4. The 1.4 will be recorded in other comprehensive income. Other comprehensive income. Comprehensive income. It is also attributed to parent, which out of this dollar 1.4 million will parent 0.98 million and NCI 0.56 million. So how did we get this figure? 1.4 into 0.6 or 60%. 40% over here, right? So that's pretty much it for goodwill. Alright, what about net assets? So let's talk about net assets as well. So let's show them the translation of this net assets. The profit which has been translated from franc will translated from franc to dollar is 6.1 million. Is dollar 6.1 million, right? This profit will be attributed to parent and thing based upon their holding percentage. While translating net assets, gain or loss on as per IS 21. That is also done already, right? So what I'll do is that as well, foreign exchange is not necessary. Per IS 21, gain or loss arises due to fluctuations of gain or loss arises due to fluctuation of exchange rate. This would be recorded in SOPL in case of individual. While preparing individual statement, however, the standard says that it should be presented under items that can be reclassified to PL in OCI. And and this will be attributed based upon their holding percentage, right? So 3.1 and 1.8, 3.1 and 1.8, 1 and 1.8, okay. So in individual financial statement, it's always different, okay? Always remember that. In individual, we take it directly to SOPL, right? Whereas in case of this, we actually take it to OCI, okay? So there is a difference between that. So that's why I've just written it down as well, so that it'll be easier. It'll be easier to remember as well. So in case of lease, what I'll do is that it's already been too long, so I will cover that in another part. Until that time, bye bye guys. Don't forget to ask any questions that you've got in your mind. See you next time.